room, but I am so happy to see you here. My name is Annette. Thank you for being here. Please invite everyone and everybody that you know that could be here. Welcome to our workshop today. This is the English version of financial literacy, courtesy of WSB, WFG, hosted by our coach, Coach Michael Kakande. And thank you for everyone. Please pass on to that invitation. Everyone should be here. We are about to begin. Thank you, thank you. And how was your day? I'm just gonna greet everybody and see how everyone is doing. Warriors 2, that's Auntie Diana. How are you? How are you, Auntie Diana? I see you're driving, so hello.
Hello.
Good to
Yes,
have
I'm
you.
good. Yes,
There you
yeah.
go. Hope you had a very good day.
Yes, it was fine. Thank you.
That's wonderful. Lily, I can see you. How are you today? There you are. Nabu Mazdam, thank you so much for being here. Oh, Maggie, look at you. You came through. I do appreciate you. I do appreciate you very much. Okay, how are you today? How are you today? All right, I don't have that much time. I'm going to start right away. I just have a few minutes to go and then Coach will get out of here. But I do appreciate you all. Invite everyone. I am so honored that I always do the take-in before we begin. Who are we? If you're new here, if you're not, that's great. If you're new here, we are the WSB. We are the Financial Literacy Department of WFG, a company that houses so many companies, multi-billionaire companies that deal with wealth management, asset management, insurance, everything in between, finances, and everything that you earn and don't earn. So today, what's our take-in? As you invite so many people to come in, our take-in is what are our habits that impede our financial stability? We do have expensive habits, and I'm not really asking for every one of you to really tell me what your habits are, but all I'm saying is just take a moment and think about this for a minute. Half the time we do have habits that are very, very expensive, but we can't even afford them. It can range from, I don't know, gambling, shopping, consumerism, something that you feel like you need to have, but you don't really need it. I don't know, smoking, drinking, over socializing, and that socializing, which is just not helpful. You want to invite everyone and you want to go out. Hiring people instead of actually learning to do things yourself. I mean, habits range from everything that you can imagine, but they happen to be very expensive. I just wanted to bring your attention to the fact that we all have these habits. We all come in. Sometimes we don't break them. Sometimes we want to break them. Sometimes we don't, but they end up costing us a lot. Look into your families, your friends, your neighbors, everybody. Everyone has a habit. We drink very expensive coffees instead of making a coffee, right? Um, I don't know, mention it all. These are some of the things that we don't or we overlook. You may get this education here today. You may get the knowledge today. You may want to change your life, but there's some things in your life that you need to change as a whole in order for you to actually realize your wealth or even be able to have a hope that actually you are making money or you're going to be saving a little bit of money. So look into yourself today. Our take-in today is we're looking at our habits today that really impede us from saving money, looking at money. There's some people, yeah, last week, Coach Michael took us through a PFS, your personal financial strategy form, right? And we also things that we do that we want to probably not do. And we want to change in order to look at the future, in order to see this. But let's look at our habits today. We have habits, we have traditions, and sometimes we just become so much engrossed into those habits and traditions that we don't realize they're not really useful. If I happen to celebrate my birthday today, I don't have to have a gift from someone that is costing $400, that's half their paycheck, but because they want to show that they're okay, right? If Christmas comes by, and I know I'm a Muslim, I don't really celebrate Christmas, but I celebrate other holidays in Islam. But even if Eid comes by, I don't have to buy the very expensive abaya in order for me to look like I presented myself on Eid day. You don't have to buy your cousins and nieces. I've seen so many people. I have actually met people and seen people and worked with people who literally spend $5,000 every single holiday, but they don't have that money. Then they stay in debt and they stay in debt and debt and debt every single year. And they really dread it. You know, Thanksgiving comes by and they're like, oh my goodness, I have to buy my uncle, my aunt, my cousin, my niece, my nephew. If I don't buy them, they're going to be mad at me for the whole entire day. And the things they buy them, they don't even use them, you know? And then this person is struggling just literally to buy, I don't know, gas for the car or pay rent. And they struggle through the whole entire time. So today's check-in is look into your habits and see exactly what it is that you can change your life a little bit around. In the meantime, we're here to learn about our finances. Be here every Friday. This is the English version of financial literacy. We learn about planning. We learn about proper protection. We learn about emergency funds. We learn about investment. We learn about all those things that can change our lives. And make us see the future and actually give us an opportunity to build legacies for our families and live wealth and enjoy and actually, you know, get lifestyles that we always wanted that we don't think about. Coach Michael, thank you for the opportunity. I hand over to you. Good evening.
Right. Thank you very much. Good evening, Annette. And thank you for being here, Annette Rama. I welcome everyone. My name is Michael. I am in Boston. 83 Cambridge Street is my office where I sit. I also sometimes sit in Maryland, in Greenbelt. I also have another office in California. And my dream is to have an office in every state of the United States of America and eventually every province of Canada. I am a financial educator, just like Annette said. And it's very imperative of me to tell you about what I learned. I am a student of finance. I started this financial education in 2021. And when I learned, I said, I want everyone to learn about what I've learned about. So because you cannot wait for me to be very rich and then come back to talk to you, that's why I always come here to talk to you at my level. And then I invite you to also come, take a look at the financial education and join me. So we learn together, we advise each other, and eventually we build a great financial foundation together. So that's how we formed this call today, just to talk to you about finance, to talk to every new person, especially those who haven't had a chance to listen to this. So if you're in this call, please invite somebody to be part of this call. Trust me, they need to be here, but they don't know. They don't know where to get that link you got from. So you simply need to share that very link to somebody in your phone and let them join this this financial education. Just like Annette said, last time we talked about the PFS. And when we are building a PFS, we looked at the tracking. The PFS is a tracking system where we normally track how much do we earn versus how much do we spend. Because normally, if you don't track how much you spend and how much you earn, you end up spending a lot. And that's why we normally have credit cards, right? We normally have a lot of debts. We normally have to pay for so many things that we wouldn't have actually been paying, but because we have easy access to everything in I mean, this is United States. So we have easy access to so many things. And because we have that easy access, we many times misuse that chance. And eventually we accumulate a lot of stuff that we don't really need. So the personal financial strategy helps us to learn, and it's a blueprint of our finances. So when you come to our office, when we sit with you, we go through your personal financial strategy, and in the end, we help you to build a strong financial foundation. Remember the last time we said this financial foundation is the only way you can build wealth. You cannot build wealth until you build this strong financial foundation. And if you just build a financial foundation, but it's not strong, again, you cannot build wealth. So when we're talking about financial foundation, we are talking about proper protection. We are talking about debt management system. We are talking about an emergency fund, and we are talking about investments. So, and we talked briefly about the X curve because it's very important to understand the X curve. So when you're younger, you're generally less secure. And when you're older, you're generally more secure. Okay, so you have to understand that your responsibilities will decrease as you grow in age, and then you must build wealth as you grow again. So in other words, this is a simpler, I'll draw for you a simpler version of a strong financial foundation, rather of the X curve. I want to remind all of us that this is our life. And of course, we start from 0 somewhere, and then probably 5 and 10 and 20. So when we are in our 20s, so let's say this is 30, 40, 50, 60, 70, 80, 90, 100. I'll put 110 because I want to beat my grandpa who died at 109. So this is our life. You don't have responsibilities as such until, so this is your life. Ideally, when you're young, you're not worried about anything. So this is responsibility. When you're young, you're not worried about anything in life. You're not even worried about the fact that you will have to eat. Somebody will think for you. And then when you get to 10, you're in school, probably you're now assuming a few responsibilities. When you're in your 20s, maybe you start having kids, right? And then in 30s, the kids are going to school. So the most difficult time is 40s, 50s, and sometimes 60s. But normally, the 40s, 60s, the 40s and 50s are the peak time of responsibility, because now, right here, you are sandwiched. You're looking after your parents, you're looking after your kids, and every one of them needs your attention and money. And then before you know it, you're in your 60, and of course the responsibility curve goes down. So when the responsibility curve goes down, now
Recording in progress.
this will happen until you die. Now, you have to understand that as the responsibility goes through all that curve, you also need to start saving money. So this money grows as you grow, it grows as you grow, it grows, such that by the time you're around this time, you have enough wealth to take care of you. So if you don't build this, that's why you find people, they never build this, so they are here. And eventually they die in the negatives. So this is a next curve. You're supposed to build your wealth as you grow. Remember, you're using less money by the time as you're younger. When you're younger, you're using less money. And when you're older, so let me draw another curve for saving. How much do I need to save at that time? So when you're younger, you need to save less to achieve this goal. When you're in your 40s, you now need to save more. When you're in your 60s, oh my God, you need to save really a lot. When you're in your 80s, you probably don't need to save because it's too late. So you'll always have to look at your responsibility curve versus your wealth building. So in this case, when you're younger, your money grows with you. And by the time you are in your 70s, 80s, you must have enough money to take care of you. Right? So this is what we talk about here when we talk about the responsibility curve. Decreasing responsibility, but then you're building wealth. Such that by the time you are in your 60s, in your 60s, you have enough money to take care of you. So when you come to our office, when you connect with the person who invited you to this call, we are going to help you to build these two, the financial education, the financial foundation, and then help you look at your X curve. Thank you. Then I want us to break down this financial foundation so we can understand it fully. Remember, I said you cannot build wealth until you build a strong financial foundation. And when we are talking about a strong financial foundation, we are talking about proper protection, a debt management system, and an emergency fund and investment. So most of the time we talk to people and they say, oh, I am good. No, they are lying. If you don't have this in place, then you're lying. If you still have some debt somewhere, you're not good. If you still don't have enough in your emergency fund, you're not good. So that's why what we are doing is very important to everyone. And that's why if you're here and you're new, we invite you to come and join us. be part of this platform. First of all, it will help you to learn every single time, not only from me, but from my seniors. And it will help you to apply the knowledge, because now you understand. I am an artist. Before I came here, before I learned about this, all I knew was music. But now I can articulate how to save money, because now I know. I am getting knowledge. I am going to Vegas. I invite you, come to Vegas in July. Come and be part of that great team that educates people about finances. Come and learn for yourself, and hence you will be learning for your future and your future your children and your grandchildren, because there should be somebody to break the chain of poverty. Not everyone. I was challenging people the other time that and what I said was very simple. I asked them, how many of your grandparents can you say out their names? Most probably your parent, your father, maybe the parent, your grandfather, and that's it. But do you know when Malcolm X died? Do you know when Martin Luther died? Oh yeah, we even have the dates. We are even eager to meet their grandkids. If I got an opportunity to meet with Martin Luther's kid, grandkid, I would really be happy. But why? Because their parents did something. They left a legacy. So if you don't leave a legacy, you're going to be as good as somebody who just passed by. But you can leave a legacy, and they say, you see this building? We named it after our grandmother, Esther, because Esther went to America and she left us with $1 million. And this arcade here is Esther Arcade, after our great-grandmother. So that's why we are saying we need to understand how to build a strong financial foundation. How do we build this? We start with proper protection. That's the foundation. Proper protection is what? Is insurance. This country here runs on insurance. If you don't have insurance in this country, it's terrible. So you want to want to have insurance on everything. We are not talking about life only, but of course, life is the most important one. Because I mean, it's what's the most valuable thing on you? Life. And when we are talking about protection, we are talking about protecting the most valuable things. So if on your life, if on yourself, the most valuable thing is a car, no problem. Just insure your car, and that's good. But if you believe your life is very important, then make sure you insure your life. If I ask you, how much do you value? What is your value as a person? Then it's the insurance. Because ideally, if I come to you and say, okay, Maggie, what's your value? How do you value your life? It means if you die, or if you were to be exchanged with money, how much would you value your life? If it's 10,000, if it's nothing, then it's nothing. So when we are talking about protection, we talk about property, right? Property. You must have protection on your property, because just imagine you went to buy that car, you went to buy that phone. We are in America. We are not in Uganda. We are not in countries, third world countries, where you're worried about the systems. No, we are in America, first world country. So you have to make sure your property is well insured. Your house, your phone, your car, that's property. Such that in case something happens to that property, you should be able to replace it. Then we talk about health insurance. When we talk about health insurance, we are talking about, again, your health. How well is your health protected? Do you have a health insurance? Medicare, if you're 65 plus, do you have Medicare? Do you even understand what it means? That's very important. And then, of course, we talk about life. So, proper protection is more than just protection. It's not just a matter of getting insurance, but do you have proper insurance? Is the insurance that you have what you actually need? Many times we just get the insurance for the sake of getting insurance. And we don't really look at what do we have? What do I have in my insurance? We normally buy car insurance because it's compulsory, not because we need car insurance. But I mean, at the end of the day, it's me to utilize the car insurance if just in case I get a problem. But I want you to just imagine how many of your friends would not have car insurance if it wasn't compulsory. So it's not just a matter of protection. It has to be proper protection. Am I properly protected with my assets, my health, my income? If I died today, what happens to my money? Is it well protected? Because if you die and your family cannot trace where your money was, then why are you working? You have no reason to work, because ideally, if you died today, that's it with you. And now we need to go into GoFundMe, and then the kids have to look after themselves, or some auntie somewhere will take over. Then why are you working? So when we come here, we talk about proper protection. And I want to be very specific about car insurance. Car insurance. Like I said, most of the time we buy car insurance simply because it's compulsory. And when you go to New Hampshire, for example, where it's not compulsory, oh my God. Everyone, number one, they drive very recklessly because they don't care. And you just have to pray you don't get involved in an accident in New Hampshire because they live free or die. So that's very, very important. What about car insurance? When we talk about car insurance, we are talking about the coverage you choose matters. So that coverage affects the price you pay for the insurance. Just like choosing not to pay for your bills on time will get you a high interest rate on a car loan, then good credit is low risk, bad credit is high risk. So even here in car insurance, high liability coverage limits low risk of filing a claim. Then low liability coverage limits is equal to high risk of filing a claim. So when we are talking about car insurance, we talk about something that is required. And when we talk about what is required, we are talking about the bodily injury. The bodily injury. We talk about the property. We talk about the uninsured motorist. This is for some states. We talk about underinsured motorist. We talk about the medical. We talk about the personal injury protection, PIP. And then we talk about the UDM property damage. That's mostly required in most of the states. But then we also have the optional where we have collision, we have comprehensive, we have glass, we have roadside assistance like AAA, we have rental reimbursement. Like if you get into an accident, who pays for your rental? Okay. So that's very important to understand. Most of the time, we just say, oh, I have full coverage. And if I ask you, okay, what is full coverage? I don't know. You can't tell. But you're paying your money, right? So that's why I wanted us to understand about the car insurance as an element of proper protection. Because if, again, why am I talking about car insurance? Because if let's say you're paying too much in your car insurance, how can you save money? Remember, our ultimate goal on this call is to save money. Now, how do you save money while you're paying a lot of money on your car insurance? So we need to help you reduce on your car payment, your car insurance payment. That's if you're overpaying it. Many times you can't tell if you're overpaying or not, unless if you come to our office or you talk to us. So that's why it's very important to mention. So when we talk about car insurance, we have different covers that I talked about. We have the liability insurance, and this is required by law in almost all the states. And it covers the other driver's expenses, the damage, the injuries, or sometimes the death if you cause an accident. and it has two components. It has what we call the bodily injury liability and then the property damage liability. So the bodily injury will cover medical expenses resulting from that accident, and then the property damage will cover repair costs to other vehicles or fences or mailboxes or buildings. So then we have what we call the personal injury protection. The personal injury protection is you. This one is also sometimes mandatory in some of the in some states, and it covers your medical expenses after the accident, regardless of whose fault it is. This is personal, it's yours. And then sometimes it may also cover funeral costs or childcare or lost wages due to injuries. So then we have the uninsured motorist coverage, where it protects you if you are in an accident with an uninsured driver from New Hampshire. Then you should be covered. So insurance will have to pay for you for the damages. And it covers the medical expenses and property damage, and then the underinsured motorist coverage, which provides an additional protection when the at-fault driver's insurance is insufficient. So you get that through the uninsured motorist coverage. Then we talk about the collision, which is optional, but often required. If you have an auto loan or lease, then you will have to buy the collision because it pays for your car's repairs after an accident, regardless of whose fault. So this is optional because you can decide not to pay for you say, okay, if I am in an accident, please don't pay for my car. No problem. They'll pay for the other car and then say, congratulations, go buy your car. So that's if you have option, if you opted out on collision, and then it covers accidents with other vehicles and damage to stationary objects. Then we have what we call comprehensive. Comprehensive protects you against the non-collision accidents like theft, vandalism, natural disasters. Maybe you're driving. One of my teammates the other day was driving and he got hit by a tree. So if you don't have that, then you'll have to pay out of the pocket. And then it covers damage to your car beyond accidents. So that's comprehensive. Then we have the MediPay, which is medical payments coverage, which is also optional, but covers medical expense for you and your passengers, regardless of fault, and may include funeral costs sometimes and lost wages. And then we have what we call the gap, which covers the difference between your car's actual cash value and what you owe on a loan or lease. And it's useful for new cars with significant depreciation. So those are the different types of coverage, but I want to highlight the body injury because it's the most important one that we normally don't take care of because we don't know. This covers, number one, the medical expenses. If you're at fault in a car accident and injure someone, the bodily injury coverage helps you to cover the medical costs. In other words, the injury is caused by that accident. So this covers the emergency care because remember, the ambulance is going to come. I remember I was talking to a friend one time and they said he wanted to get the feeling of sitting in an ambulance. So he got sick and called 911. When they called 911, it came. And then he pretended as if he's very sick and, he went to the hospital. Only to come back after some time and he's receiving a bill that he used the ambulance. So who pays for all that? Your insurance. It's going to pay for the hospital fees, for the follow-up visits, the medical equipment like the crutches, right? Remember, this person is a liability, you're on their mercy if you caused the accident. They can even say, oh my God, we are not healing for a full year. You can't say, no, I see you're healed already. Why do you still have to go to the hospital? No, as long as they still have an injury, insurance has to keep paying. And if the insurance can't pay more, then guess who will pay? So that's very important to understand. Then we have what we call lost income. If the injured party can't work due to the accident, guess who is going to pay? You are. So this covers the compensation for the lost wages. Oh, I feel very bad. You see, I have a headache, I have a backache, I cannot work, and I have to eat. Who will fund that? It has to be you through your insurance. Then how about funeral costs? In the unfortunate event of fatal injuries, sometimes bodily injury will also cover, part of it will cover the funeral expenses. How about in times of pain and suffering? If the injured driver or passenger experiences long-lasting emotional trauma, you don't have any limitation to trauma. Every single day I wake up, I feel like, oh my God, I dreamt that accident. I can't even understand. Oh my God, who has to pay for that? You was in fault. So you have to give the compensation to the pain, to the trauma that the person is feeling. So you must be properly protected. Otherwise, it's disaster. How about legal fees? If the injured party decides to sue you, the coverage will help cover your legal defense fees or court costs or judgments or settlements or whichever. So you must, again, be properly protected. Because if you're not properly protected, they are coming for your pocket. So we already see the 100, 300, 100, or 50, 20, 50, okay, 20, 50, 20, or every insurance policy has its own numbers, but we have to understand these numbers because they are very important. So a car insurance policy with this number, 100, 300, 100, means it is covering up to 100. So this is called a split limit. Each of these numbers represent the maximum amount of your insurance for a specific part of the liability coverage. So meaning, if you have 100, 300, 100, this means that your bodily injury liability limit for a person in the accident is 100. In this example, is 100. Okay? And if it's for the total of the people involved in the accident, the number in the middle is the total limit in the coverage. Remember, I said these are split limits. So the number in the middle is the total of the coverage. And then the 100, the last figure is for the property. If you probably, let's say you hit a mailbox, you have to pay. If you hit whatever. So that's what it means, right? So this means if you hit somebody else's car and injure people, your insurance company will pay up to that much. So this is what I mean. So let's say your car has 20, 50, 20. So this means this one, who is writing on my board, please don't write. So this means the 20 is the personal limit. This is per person. Per person, the limit is this. Then this is the total for the people involved. And then this is for the property. Meaning, if you are in an accident, right? And let's say this car had 1, 2, 3, 4 passengers. Are these percentages? No, this is money. This is money. So 20 means 20,000. 50 means 50,000. 20 means 20,000. So this means your limit per person in this case is 20,000 per person, 50,000 as a total, and 20,000 for property. That is what it means. Mm-hmm. So let's say, let me give you a scenario. Let's say you are in a car, right? You're driving your car. Okay. And then this car knocks. So you are alone. Maybe you're drunk. And then you hit this car. And this is your limit. Okay? So now let's say person 1 has a lot of injuries and probably they will need to have, they will probably need 40,000 to heal. Okay? Then there was person 2 in that car who probably needs 20,000. And let's say person 3 probably needs 10,000 to heal. And let's say there is a kid who needs, let's say, 5,000 to heal. So all these people were in the car, the mother, father, son, and the baby. So you hit them. Okay? And this is how much each one of them need to heal. But your limit is 20, 50, 20. Now, this means the maximum that each one of these can get is 20,000. Does it make sense? The maximum that, let's say, person 1, father, can get is 20,000. The maximum this person can get is 20. This one is 20. This one is 20. But the maximum you can give all of them, the insurance will give all of them, is 50,000. So maximum is 50,000. So they can't, all of them combined cannot spend more than 50,000. So this means In this case, person one can use up to 20,000. Okay. Person two can use up to 20,000. Then person three can use up to 10,000. Then you would pay this out of pocket. Or you can say this one will use 20, maybe you first pay the 5,000, and then this one will use whatever. So basically in this case, you would have, because this is 50,000, 55,000, so you'd be paying the 5,000 from your pocket. Okay? You'll be paying the 5,000 here and plus the 20 here. Because remember, this one can only use 20,000. I hope I am making sense. This is why this is very important, and we don't because we, of course, we don't know the repercussions. We don't really take too much time to understand this. But if you have a less bodily injury, it's a disaster. So that's why I was saying here that if one of those passengers, so let me give you this example now for the 100 and 300 and 100, so you can understand more. Let's say let's say you hit someone's car and injure 4 people, your insurance company will pay up to 300,000, which is in the middle, towards their total medical bills, with a limit of up to 100 per person. So if, let's say, one of those passengers has 150,000 in medical expenses associated with that accident, your insurance company can only pay 100,000. Where does the person get 50,000? You can't tell them, oh, sorry, my insurance only pays that. No, they'll have to come to you. You'll have to pay, find a way. And you would also be responsible for the other 50. You'll be responsible for the other 50,000 because the limit is 100. Okay, so the amount your insurer will pay to repair another person's vehicle or other property is the last 100. So that's why I am saying this is very important to understand. Okay, I'll give you an example here. I have 2 examples. I'll start with this one. So this is one lady plus, let's say, a husband. Okay. Maybe they have 2 cars. But then the bodily injury liability for each person is 15,000 and each occurrence is 30,000. And property damage is 5,000. And then look at this person, this one here, who pays that much. And in case of an accident, they have bodily injury of 250,000 and 500,000 each incident, and property is 100. So this means in case this person here gets into an accident and he caused that accident, insurance is only going to pay 15,000 per person. And he would find the rest of the money by himself. And the maximum they will pay out is 30,000. But with this one, insurance is going to pay out 250,000. And in total, if there are more than one person, then insurance is going to pay up to 500,000. And for property, it's 100,000. Now, we don't really consider all these when we are buying insurance. Number one, many times we are all thinking about the price. Okay, get me a small amount that I can pay. We don't look at this. Other times we just say full coverage. Hey, your full coverage can actually have this as your bodily injury. Because full coverage ideally means you have all the coverages, the collision, the uninsured, the PIP, everything. But how much do you have in your bodily injury? So that's very important. So when you come to our office, or when you talk to us, or you talk to somebody who invited you, we can help you to fix or look at your policy and advise you accordingly. Sometimes there are people that we've helped to fix this, and they get they get maximum coverage, paying sometimes the same amount of money in the same company that they have a policy in. So many times the agents will not tell you all this. But why am I telling you this? Because my job is to educate you to save money, such that you can have a better tomorrow. So if car insurance is taking a lot of your money, and then you're not getting the value, then it's my concern. I have to talk to you to make sure you save more, because we can help you save more money on your car insurance, because we want you to put that money in probably a life insurance policy, maybe in an emergency fund, maybe to pay off your debt. So we want you to use that money. Okay? Priscilla came with hers here, but I will look at this after. But yeah, that's very important. So, if your state, okay, I wanted us again to talk a little bit about what happens if there is a car with no insurance. If it's your car without insurance, then of course there are some repercussions. There could be legal penalties, like of course, in every state, apart from Virginia and New Hampshire, in other states, you must have some form of liability. So if you don't, your license might be suspended. You will pay the fines, or you can even go to jail, or you can have your car impounded. If your state requires car insurance and you're at fault, then you may have to you may be required to provide compensation for any damages you caused if you don't have insurance. And the specifics will depend on where you live. If your state is a no-fault state, then all drivers obtain compensation for minor injuries from their own insurer by filing a claim under their personal injury protection. Because remember, I talked about the PIP. So when, let's say, you're hit by a car from New Hampshire and you get damages or you get injuries, then your personal injury should be able to cover you. That's when you call your own insurance company. So you could be held responsible for property damage caused to yourself though. And if injuries were serious, then the other driver could make a claim against you to recover compensation for medical bills, pain and suffering, and emotional distress, and loss of wages, which are not covered in your PIP. So your insurance, you're at fault, but you don't have insurance. Or you're at fault, you know, you're in with a car that is not insured, then your insurance will pay the PIP, but then who pays for the compensation? Then it should be you. If your state is at fault, is a fault state, then you can be held responsible for covering all crash related costs, including medical bills, loss of wages, pain and suffering damages, and emotional distress damages, regardless of how severe the injuries were. So normally, your insurance company would pay your legal bills and cover damages the other driver sustained up to policy limits. But if you don't have insurance, then the other driver can try to collect from you personally. If you die, let's say you didn't have car insurance, you hit somebody's car, there is a lot of damages, and then you die. What happens? No problem, the deceased will pay. Your personal property, your personal assets might be used to cover for the liabilities resulting from the accident. So that's why insurance is very important. You cannot drive without insurance. But many times, I know us, we risk. We risk and drive without insurance because you know, okay, I am still working, you see, next week, let me just drive this, you know, let me just work this week. Next week, when I get my paycheck. Why? Because again, it comes back to what? Living paycheck by paycheck. You spend the paycheck before you earn it. So that's what this financial education is supposed to stop. We always invite you, please come and learn. Please come and join us and learn about these things, because when you learn about all this, then you know what exactly to do with your life. It's not just a matter of buying insurance because it's compulsory. Remember, what we are talking about is building a financial foundation. And building a financial foundation starts with what? Proper protection. Proper protection is what? Insurance. And insurance is not only life insurance or health insurance. Property insurance is also very important. Mm-hmm. So, yes, I'll entertain a few questions and then we close.
I do have a question, Coach.
Yes.
So as a driver, what is my responsibility, or what questions am I supposed to ask the insurance agent in order for me to be properly protected?
You just come to our office and we look at whatever you want.
I can't come to your office, but I'm all the way this way.
No one cannot come to our office. We are in our office right now. So how can you say you can't come to our office? We are in office right now.
Very true.
But yeah, when you're shopping, you have to just understand, okay, if I have full coverage, for example, what do I have in that? What is my bodily injury? So if your bodily injury is less, then you can ask them, I want more. Will it cost you some money? Yes. But sometimes the reason I'm telling you to come to our office is because when we look at your policy, then we can see how much you have. We just have to advise you on what to ask your company. Because we can read this and interpret it, and you might not. So that's why we say, how about you come to our office, we talk, and then, yeah. Zam is asking, Zam asks a question. What if somebody dies in accident without insurance and without property? What will happen? Well, in that case, I guess nothing happens. I don't know. I guess then the other person, that's why the other person also still has to be covered in case they're driving with such a reckless driver who doesn't even have the property you can go for. You have to be insured yourself, such that your insurance should be able to cover just in case, even when you're not at fault, it will have to cover. So that's, or else if you find such a person, then you can't do anything. Right? Yeah. Okay. Any other questions? If not questions, Sylvia Shangani, welcome. I would like to speak to you. Say hi. Sylvia Shangani. Are you from Kenya? Sylvia. Okay, Sylvia doesn't want to say hi. Who is iPhone? iPhone, can you say hi?
Hi.
Yes.
My, thank you very much, Mr. My question is, what if somebody is driving my car and has an insurance, but it's my car? What is gonna be happening?
Okay, that's a good question. When this person is not on your insurance,
Yes.
disaster. Disaster, terrible. If they are not on your insurance, insurance will not pay.
Right. And when somebody's on my insurance,
Then it is going to pay because you're paying for that. You're paying for that person to be on your insurance.
okay.
It will have to pay.
Okay, thank you very much. I understand now.
Yeah.
Mm-hmm.
So that's why
Michael.
you want to have everyone that drives your car on your insurance.
Okay. Michael, mine is about the amount that somebody pays to for insurance. Because people look at the period, they've had their cars and they're not getting any accidents. And they actually ask themselves, why am I paying this money? I've been on the road for years. Because people think if you're on the road for some time, then you're not gonna get an accident. So how can I explain to that person to understand insurance pretty good so that he doesn't have that way of thinking that once I'm good on the road, I'm not gonna get an accident?
Well, you just have to explain to them the definition of accident. I know what you're talking about. Some people will say, oh, I've been driving for the last 20 years. I haven't made any accident in the last 20 years. Yes, that's true. But then there this day that is coming. So what is the definition of an accident? It's something that comes when it's not your will. It just happens.
Mm-hmm.
And it's out of your control. So you just have to explain to them. Again, it's education. That's why we are trying to educate everyone. that you need to understand that an accident happens. It's just the same way people think they will not die so soon. So why should they have life insurance? Because he's only 20 and you're telling them to buy life insurance, you should tell them to buy insurance when they are 60 because they believe they can't get sick in their 20s. You just have to educate them that, hey, you see, you can actually get sick in your 20s. You can actually get an accident in your 20s, and then you can't walk anymore. What happens? Do you have enough money to look after you for the rest of your life? You didn't die, but let's say your 2 limbs are cut off. What happens? Do you have money to look after you? So it's education. You just have to understand, to make them understand that, well, I know how you're thinking. Probably I was thinking like so, but look, this is an accident that we are talking about. I've had 2 accidents in my life. One, my car refused to brake. It's not my fault. The cars refused to brake and woo, I hit another car. So it's an accident. So they just have to understand. Right? Mr. James, how are you doing?
I'm very well, thanks. Yourself?
I'm good, good. Yes, sir, you're so lost.
Yeah, I've been held up. I've been held up with my finals, so it will be taking much of my time, yeah. But
Yeah,
today I'm
because we
available.
have unfinished business.
I know,
Mhm.
and it's in my to-do list.
It better, you better prioritize it because it's very important. Okay. Anyone with any questions? If not, Annette, you can wrap it up.
That is so good. Nobody has any questions? You folks, you want to tell me all of you know the fine print on all your car insurances?
I just have one question. I don't know whether
There we go.
I don't know whether I talked about the natural disasters like, you know, floods and everything. If it happens and maybe your car is gone with the water. I don't know what happens after. Did you hear me?
Again, it depends on the coverage that you have. You remember I talked about the comprehensive?
Yes.
Yeah. If you don't, then sorry. Oh my God, that's too bad. Yeah, that's it.
So what
Yeah.
is the very right insurance someone should pay? Is it the maximum?
Yeah, you want to have a full coverage with a full body injury,
Yes.
but of course it's going to be a little bit expensive.
Yeah.
But if you come to office, that's
Yes.
Mildred. When you
Yes.
come to office, we shall look at how much you pay and we see if you can. Sometimes we are successful with reducing on your cost depending on, because we run different quotes of different companies.
Right.
Sometimes, of course, it's because you are only exposed to one company and whatever they give you is what you're going to take, right?
Of course. Yes.
Yeah, so when you come here, we have the privilege of running different quotes, and then we can say, you know what, maybe you're actually paying the lowest. Maybe you can go with this company. Yeah,
Okay, thanks very much.
you're welcome, Senga.
Well, people, there you have it. So now would be a great time for you to go and pull out those car insurances that you have and look at them really with a second eye, right? And you wonder what you're paying for. So this is what happens every Friday evening. We learn about things that we probably never knew before, but very, very crucial and vital in our lives. Some of you have teenagers, they're beginning to, drive cars, they are on the roads, they have to know and invite them, bring them along with them so that they can learn. Because you know what? You're going to go out there and you're going to get them insurances and you're going to tell them you're going to pay $200. I don't care how you pay, but you pay it. But they don't know exactly what they're paying for. So now it will be the time for you to bring your teenage drivers into these classes so that they can come and learn and then learn a little bit more. So my getaway is thank you so much for being here. Every Friday, this is what happens. We do get the English version of financial education. We learn things that we should probably have learned, but we never learned in school. But they are very important in our lives. So thank you for being here. Invite everybody next
Mike,
time.
I have a question
Yes.
before they wrap. All right. Okay. I've been involved in several car accidents, right? And the claim of the insurance company to increase the amount of money is all about all the accidents, the tickets you get, and everything, right?
Mhm.
So when you find out that your insurance, after what period of time do you find out that your insurance is supposed to decrease or increase?
So it depends on, like you talked about tickets. Sometimes it will take if you've had several accidents, it will definitely take some time. You just once in a while you keep on going back to them. That's why most of the time you have to pay for your car insurance for a year, right? It's a period of 1 year. Then they use the year to assess what is your driving record now. What are you still doing a lot of accidents? Are you overspeeding? So they always want to assess. So you can't tell, you just have to ask them, okay, am I reducing now? Am I what is happening to my policy? Can I pay
All right.
less? Can I?
Is
Yeah.
it supposed to be like 6 months or a year to check out, or which is
Yeah.
it?
They
Yeah.
normally assess, yeah, in a year, yeah.
Okay, in a year. All right. All right. And I'm asking, is it all right, you hear that is it supposed to be like, is there any car insurance where you check in that you're supposed to get some money back or your money back when you not get the accidents? What is it there?
So that would mean return of premiums. I need to check about that. I haven't really heard of it, but if it is there, it should be it should be called return of premiums. You can also check it out. Because return of premiums in insurance means I'm paying this X amount of money, but if I die, let's say in life insurance, if I die, please pay all the money that I applied for plus all the money I paid. So that's a return of premium.
Coach Michael, so many years ago, about 20 years ago, when you had health, life insurance or whatever, car insurance, and you proved to be a very good driver on the road, at the end of that year, the company would remit some kind of money, like appreciation money, and it will say, thank you for being such a good safe driver on the roads. You didn't kill anyone and you didn't break the law. So here is a token of appreciation. And then they say, if you would like to come in and we can talk about your new policy, then you're more than welcome. And people would go back. Then that thing died out. So that never happens. Whether you drive well or you don't drive well, you don't get that back. I guess that is what maybe Hassan was trying to ask you about.
Yeah, because ideally, remember they are going to assess and look at your driving record for that, for that period, and say, okay, you know what, you're a good driver for this period, maybe for the next period, pay less, but not really saying, oh, please, this is your money, sir. That might be difficult. But I think the return of premium that exists is if you've paid your premiums in full and then cancel your policy before it ends, then insurance companies will refund for your remaining months.
So when do you basically when do you gain points and when do you lose points basically?
You gain points if you have a good driving record. You lose points when you have a bad driving record. You get a ticket over speeding, then you erase into accident, you have DUI, what's it that? DUI, DUI, drink driving,
Right.
you lose points.
All right.
Yeah, so just make sure you don't drink and drive. Just make sure you don't, you don't overspeed. Just make sure you don't, you pay in time. Yeah.
All
Okay.
right. Well,
Thank you
so
very much.
Coach.
Can I have La Candice? She's just coming in as we end.
Oh,
Can you
yes.
say hi?
Thank you for being back again. That was very nice.
La Candice, you came in very, very late when we are closing. Can you just say hi?
Hello.
That's good. How have you been?
Good.
Yeah,
hmm
you missed a great session.
Oh, wow. I'm just waking up.
Sorry. So get back to the person who invited you so you can probably have a one-on-one.
Okay.
All right. Have a great night, everyone.
Bye-bye, everyone. So I invite invite so many other people to come in next Friday. We have a great show coming through. Hello? Okay. Well, if there's nothing else we can do, have a very great Friday. Thank you for bearing with us. We do appreciate you. Good night, Coach. Thank you for the great lesson we've learned today about insurances. Oh, and go check your fine prints on Yoka Insurances. Thank you. Have a good one.
Thank you, Nabaka.
You're welcome.